Okay, well, welcome to the 6-week masterclass with Fractal Markets, aka Tyson. So you guys can all address me as Tyson moving forward. So this is week 1, super exciting stuff. I do have quite a bit of just, I guess, criteria that I want to go over in terms of what to expect from the masterclass, what the goals are. And then we're going to backtest a full New York session for the remaining time. We'll have typically anywhere from 5-minute to 15 to 20 to 30-minute Q&A at the end, provided that there are questions. I just want to kind of get a few things off my chest that I, not so much suffered with last masterclass, but just things that I learned how to kind of do this thing a little bit more proper and more effectively. So basically, we're going to be meeting, obviously, same time, same place, once a week. The way that I'm structuring the telegrams now is I will not necessarily be super active on the Telegram during the session. And the only reason I don't do this is because you're trying to put the nail in the coffin with this strategy, and you got to be able to think for yourselves. The ones that are, at least in the previous master classes, the ones that were the quietest typically did the put in the most work, and they had the most success with the strategy. Now, this isn't to say that I'm not going to throw in, hey, like I'm looking at this, hey, I'm looking at that, whatever. But ultimately, when I'm trading, to be honest with you, I need undivided focus, and I would expect the same for you guys. So what I would suggest is just, accept the fact that like throughout the 6 weeks, we're not going to be that interactive during the New York session. However, I'll stay active on the community and I'll answer questions as necessary, but it does need my entire attention to be able to trade full time. With that said, at the beginning of every single session, what I'm going to be doing is about a 5 or 10-minute video call with anybody who's interested. I'll post the link every single morning and just say, hey, this is kind of what I'm looking at. Here's the POIs, here's the liquidity, here's the areas that are of interest to me, and so forth. So I think that's the way I'm going to move kind of going forward. And the only reason why is because it's really hard to answer every single person's questions, especially when there's a pool of almost 40 people. It really hinders the way that I trade. So anyways, just full disclosure, that should be the expectation throughout this entire session. In week 7, we do it was only supposed to be one trading day, is kind of what you guys paid for. But what I'm doing now is I'm doing basically a bonus week, if you will, in week 7. And it's basically 5 days straight, whether there's news, whether there's no news, rain, shine, don't matter, snow, hail, doesn't really matter. We're going to do an entire week of live trading, basically together as a community. And the reason I want to do this is not so much to copy trades, more than welcome to copy anything that I do, but the idea is to go through the process of how it is I break things down after basically learning the strategy for 6 weeks straight. So just wanted to, oh my God, I'm just beside myself with EU. I'm sorry, but things are just flying here. I'm probably up like 25R on this trade right now, full volume too, which is pretty sweet on a Friday. So week 7 is going to be basically an entire live trading session for the entirety of the entirety of that week. So it'll start at 7:30 in the morning Eastern Standard, and it'll go until whenever I stop trading. Sometimes it's 9 o'clock in the morning. Sometimes I only trade for an hour, hour and a half. Other days I'm there for 3-4 hours. But my cutoff time is basically 11 o'clock. I'm off the charts. No matter what, off the charts at 11, stops get rolled to break even or trailed underneath, structure low or structure high, whatever it might be. But ultimately, man, it's just about, valuing that time. And I think that's a big part of the reason why a lot of you guys are migrating over to how I trade. Maybe not so much from a, risk reward standpoint, but it's more session based. It's just, what, we get in, we get out, we get our 5, 10, 15, 20 hours sometimes in a day, and we get the fuck out of there. So I just want to keep it as loose as possible. And ultimately, man, I got into trading for only one reason, and it was for the freedom. The money is the byproduct, as most of you guys know. So just going to look at my notes really quick. Okay, So I just want to talk, one of the things I think that is almost a necessary evil to kind of get throughout this is going to be the TradingView Premium. At some point or another, can definitely be done towards the end of this. I understand it's a pretty hefty investment. I believe Black Friday, there's a really good deal on it. If we do want to start using the seconds chart and stuff like that, just be a good idea to at least consider it when there is a sale. The other thing is, if you don't use a risk management tool on MetaTrader 4 or 5, I would suggest getting the on-screen version of Magic Keys. If you don't know what that is, or if you've never used it, I'm going to be posting probably Sunday, or maybe even later on today, depending on what's going on this afternoon for us around the house. But long story short, I will be posting a link to basically get the on-screen Magic Keys. Now, if you have a MacBook, you're going to need to run Parallels, which is also another premium thing that you're going to have to buy. It's about $90 or $90 for the year. But these are the necessary tools. You can't build a house without a hammer. So it's the same thing with trading. It's just these are things that we're going to need. And then, getting into, a couple of weeks in, we're going to start talking a little bit more about funding challenges and stuff like that. But there's no rush. 6 weeks seems like a long time away to potentially get funded. But I'll tell you right now, 6 weeks goes really quick, and it takes another 4 to actually go through the process of getting funded, provided you do everything right. So you're looking like January 1, you guys could all be funded for up to $200,000, depending on what your budget is. So don't rush into it. Really nail down this strategy first before we even consider doing it. This isn't a lottery ticket, you know what I mean? And don't treat it that way. It's work, and it's never not going to be work. It's constantly adapting to market conditions. But yeah, that's basically it, man. I'm not going to talk your ear off too much about what else is to come. Basically, you've paid for 6 very extensive back testing sessions, as well as the recordings with every group that comes in. So Friday, Saturday, and Sunday, I try to do at least 2 different videos per week. That way you have a little bit more content to kind of go over. So for today, what we're actually going to do is I'm just going to talk a little bit about what happened right here. And then we're actually going to go back to November 2nd, which was the first day of this week. And I'm going to talk about 2 of the trades that I took that passed my Forex funds for a 200K account. And I just want to kind of go over how to just look at pro trend moves, how to be patient, how to understand when markets are not necessarily getting manipulated, but understanding the liquidity behind it and what needs to actually happen in order for these higher time frame moves to kind of play out. So without further ado, we're going to start this thing. So I'll just talk about today. So this is typically what I do. I do yes or no, and you guys can either circle or whatever you want to do for either of these. So yes or no, did anybody take trades today? No. Okay, cool. It's a news day. It's good. It wasn't a trick question. It's actually good that you guys all answered no, because in the trading plan, it actually says we don't trade high impact news. So make sure you guys just get rid of all of your drawings when you do them on the screen. I'm not going to be clearing everybody's drawings. So please get rid of all your stuff here, guys, whoever this is. Thank you. Okay, well, one of the ways you need to look at news, again, this is just kind of like a little sidebar conversation that we're going to have right at the beginning. We could see that we built equal lows across here. As soon as news came out, you can see that what usually ends up happening is we end up just smashing through to take all the liquidity, right? So you can see all the equal lows that rest all the way over. Let's go over to the 4-hour. Yeah, so we had the equal lows sitting here. Once we smash through, this is stuff that we're going to get into a little bit later in the actual masterclass. But once we smash through, typically what ends up happening, and this is only usually for news days, typically what ends up happening, if you go down to like the 1 minute, you'll see like some sort of a change of character kind of thing. On a second chart, you can see it here. So I ended up taking a trade here. And then on this guy right here, it's the same thing. We basically broke this wick right here, came back, took this guy out. And the reason we can do stuff like this is because we've taken liquidity and we've taken liquidity and then been able to say, okay, well, now we've generated liquidity to be able to fuel this move to the upside. We're going to get over and deal with all this kind of stuff a little bit later in the session, but I just wanted to kind of recap a little wee bit as to how I took these trades. And the whole idea behind it was that we had so much liquidity resting at the low side that once we took out the sell side liquidity, it's really simple. Once we take all the sellers out, who is left? It's only the buyers, right? So again, a little bit more advanced stuff, but we'll get into that in the coming weeks. So let's go over to, I believe it's November 2nd that I wanted to take a look at. We'll get rid of all of our drawings. November 2nd, right here. Yeah, something like this. Okay, cool. So November 2nd is right in here. You guys can see at the bottom. So basically, I'm going to kind of back the charts up to about 7 o'clock, I guess. Yeah, 7 o'clock. Okay, so right here, you're given price action. We can kind of see what's going on here. So you can see this huge bearish leg, right? So big bearish leg, break a structure. We're reacting to, I think, some form of demand over here. So let's just map everything out as if it was a real market situation. And another thing I just want to mention at the beginning of this is you'll notice on the trading plan it says 15, 5, and 1. Okay, these are typically everything you're going to need. Is there times that you're going to be able to, are going to need to use the 4-hour? Absolutely. Is there times you're going to need to use, maybe the 1 hour? Of course. But for the most part, everything that you're going to need to do is going to be available on the 15, 5, and the 1. And throughout the next 6 weeks, I'll be able to kind of put the nail in the coffin for that and be able to show you guys how that all works. Okay, so right now, this high has created this low. We basically did something like this where, this structure was broken. And it's to no surprise if you look to the left, all the liquidity that's resting here. This is why we just rocketed through. Okay, let's go like this now. And we got the break structure. Okay, let me just get rid of these guys. And go like this. Okay, so break a structure. Boom, done, come back up. So first thing you're gonna wanna do is basically try to sort out, okay, well, where is this thing gonna pull back to, right? So typically, we're going to be looking at order blocks here. We're going to be looking at order blocks here. We're going to be looking at order blocks here, here, right? Here's the thing. The order blocks that you need to be considering, or the POIs that you need to consider, are the ones that meet a certain criteria. And these are the ones that meet a certain criteria for me. Personally, what I'm looking for is, okay, well, we broke structures, so we're not looking at these, right? These don't make any sense. We need to look at the ones that are above the break of structure, right? So when we start to look at this and we say, okay, well, we've basically tapped into this and failed to produce a low. So this is mitigated. That's no good. Now what we got to do is say, okay, well, where else could we go, right? So first instinct is probably going to be somewhere in here, which is the right answer. We're looking at potentially coming up to this POI. However, we don't necessarily need to come up to the POI. But what we like to do, let's just go like this. Goodness. Come on. There we go. Supply. Okay. So we got supply sitting here, right? Now, what I like to do is kind of read between the lines a little bit and say, okay, well, ultimately, if I was to take this is the low that put it into the high. We came down, we failed to make the new high. So ultimately, I'm taking my premium and discount from here. And I'm saying, okay, well, ultimately, we've tapped into the premium of the leg. So it doesn't necessarily mean that we're going to be coming up to here. So we can see that we are in the premium of the leg. Now we're going to start talking about I guess the important details of what's going on here. So did we come up and mitigate anything on the left-hand side? No, we didn't mitigate anything. However, because we are in the premium of the leg, we can start looking for these higher time frame shorts. So what I looked for here was really, really simple, okay? We can see that we have equal highs resting across here, right? So equal highs, and then the equal highs get ran and immediately fall down. And the reason this happens is inducement top. is once we push through, okay, once we clear out liquidity across equal highs and there's no more buyers, there's no more buy side liquidity sitting above here. Okay, we've pushed through and we've now broken down. If there's nothing left up here and we've already taken all the stop losses and all the breakout traders out of the actual market, well, what's left, right? And this is the question you have to ask yourself. Okay, well, yes, is this a break of structure? Technically, it's a break of structure. However, when you see all the built up liquidity that's resting right here, this is now known as, we've now induced this area to make people believe that we are going in this direction, which gets a lot of people trapped in the market in and around this region. So what does it mean for us? Well, again, we're working our way over here on the 15-minute chart to build this story, right? So where the change of character happened, does anybody want to kind of map out, in terms of the 15-minute, where was the change of character solidified? What created this high? There you go. Yeah, exactly. So again, this is on the 15, right? So we're able to say, okay, well, ultimately, you know, demand has failed from this region, right? So if demand has failed from this region, that's the chalk, right? And the reason this is the chalk and not a break of structure is because we took this liquidity and then we broke structure immediately. This is known as that changing character. We've basically taken everything and then pushed away from it. So what does that mean for us? Well, it's really simple. I mean, we've only got one option here, right? We're coming up into this area right now. You can see that we've technically broken it. So where does supply control the market from? Anybody want to mark that out? Bingo. Okay, so this is not new stuff. I don't think this is pretty easy to comprehend. What was I doing here? Chalk to the downside. Okay, get rid of your drunks, please. So a lot of times what I like to do is just take these wicks, okay? There's times to do that, there's times not to, but ultimately on a lower time frame, we're probably going to be able to see that technically this entire area right here is the POI, okay? There's no ifs, ands, or buts. We can refine this down a little bit later on the lower time frames, but as of right now, this is what we're looking at. So when we're starting to push up into these areas, okay, and we're starting to you know, kind of come across equal highs, and then we start doing something like this, we're looking at this POI as a really good area to be able to take sells from. We're not going to be looking for buys this late in the leg. Okay, so this is what, 7 o'clock in the morning. So let's jump down the time frame and just start to see what it is that's going on, right? So ultimately, we got supply and control the market from kind of this region right here. Okay, so you know, supply is ultimately in this area. Let's have a look and see if we've broken it. Just to say. So we'll just leave this sitting here like this just for a second. But yeah, that's basically it. I mean, that's the only place where, you know, demand or where supply can actually take control of the market is either here or here, right? So step down to our entry time frame because we're getting close to our POI. We can start to say, okay, well, let's figure this out. So a lot of people might put limits on something like this, just above liquidity or whatever it might be. Personally, man, I just like to look for, you know, a tap into POI 1 minute flip, and then we can essentially take trades down to the downside. So let's just kind of play this thing out and see what ends up happening here. So let's go like this. And get rid of this guy. Yeah, this guy has already been mitigated. Okay, so let's see what ends up happening here. We'll start playing through. Okay, so we start to get a reaction, right? And it's to no surprise, right? Like, I mean, ultimately we had this little wee bit of supply kind of sitting right here. Okay, we've tapped into this, we've pushed down, but now we've created kind of like this little equal high, or this mitigation rather. So what does that mean? Well, basically, as soon as we mitigate something, the next time we come up to it, more than likely it gets ran as liquidity, right? Or the likelihood of us coming up and tapping in and tapping in and tapping in and producing new lows basically gets depleted. It might show something like this, triple top, quadruple top, whatever it is. We might break down and then come back up and then end up going in the intended direction. So we're going to just kind of look at what's going on here. So right now, are we looking for longs? Yes or no? I mean, this should be really simple. I mean, we're this deep in a pullback, we shouldn't be looking for longs. We're going to be waiting and sitting on our hands, essentially waiting for price to kind of show itself. Expectational order flow on the 15-minute, which is our structure mapping, is always done on the 15, right? So if you look, like I said, this produced this, and then took this out. Boom, there's your break of structure. Here's your change of character. So we're expecting to come back up into this. And the reason this is going to be a really strong point to trade from is there's nothing of equal highs to the left, and we've already taken liquidity across this area and then broken structure. So these are like the most valuable areas that you can possibly trade from, again, in my opinion. Okay, so let's go to the 1 minute or the 5 minute, 1 minute words. Okay. So start sitting this across like this. And what are we expecting to happen? Well, we're building equal highs, right? So let me just go like this. And we're just going to run this thing kind of across like this. Okay. Okay, so right now we've got liquidity resting right here, right? Okay, so start playing price. Okay, so what is this right here? Technically, there's a break of structure, right? There's technically a break of demand here to a certain degree. So when this happens, and we have this break of demand, I mean, it's barely, but it's still a break. Nonetheless, I don't care how you frame it. I mean, this should have held there, right? So ultimately, when this fails, how many people, where your old self, when you first joined whatever Smart Money Concepts trading course, whatever it might be, where would you look to trade from right now? 100% you would, or even at the extreme. The important part is, I think we've come a long way probably at this point. If you've signed up for this class, yes or no, are we trading from either of these right now? Probably not. And the reason why is because we're going to be sitting here waiting to see how liquidity builds. And then from there be able to kind of formulate some sort of analysis. So here we go. We're starting to move away. We start to break up. Okay, break down. Okay, so at this point right here, I'm just trying to remember what I did here. If I ended up taking, I think I actually ended up taking a long somewhere around here, if I'm not mistaken, on a flip. But let's just play price through. Okay, so we've got another little level of demand down here. We've got the extreme, equal lows, all these things. Anyways, we're not going to get into bad habits here. We're just going to keep playing price. Okay, we've come down. We've essentially tapped in to demand right here. Okay, so once we tapped into this sort of demand level in this area, what I was looking for was potentially longs. And the only reason I was actually looking for longs is if you look at this level, technically we've broken above it, right? So for me, this is still classified as a break of structure. A lot of people don't take wick breaks as breaks of structure. Personally, I do, because supply has one job at that level, and it's to hold and basically produce a new low. So if it doesn't do that, it's going to mean not so much that you need to take every single trade that's available because of it, but it ultimately means that no matter what, this is going to produce a reaction because we've broken through this structure, we've cleared liquidity, and ultimately what we're expecting is to come down like this, okay? Or come up like this rather. So what I ended up doing is, okay, right now supply is in control from, sort of this level right here, right? So if supply is in control from this level right here, right? I'm not looking for sells. I'm looking for, okay, we pulled back to the discount of this little 1 minute leg. We could potentially look for some buys provided we break above this, right? Okay, so now, yeah, equal lows. Okay. Okay, so we've broken above. So now you got to figure out, okay, well, would this make sense to potentially get into something, right? So personally, what I would do is on a 15-second, I probably see this and potentially get into something. However, there's nothing really of substance to be able to kind of trade right this second. So let's just see what ends up happening. We start pulling back. Okay, so something like this, when we start pulling back into here, now we're in this, this kind of range bound, demand area right here. You can see that this entire area is technically where demand kind of took control of the market from. Did we tap into, yeah, this guy right here? Almost. very close to. So I'd probably jump down a time frame and maybe say, okay, well, if I see a little flip in this area, I could consider getting into a long to run the week high. Okay, so here we go. Okay, so we've taken out this little level right here. This is kind of like the second flip. So you could technically put an order somewhere in here. So let's just do that, see if anything kind of fills up. And just kind of cover either this low right here, 1.2, or just underneath this low right here, whether or not you want to go that far. But personally, I'd probably just be 1.2 pip stop and run the week high. Okay, jump back out to the 1. I don't know if this ends up getting filled or not, but we'll see what happens here. Yeah, we don't get filled. So at this point, again, we're heavily counter trend. My order is probably getting removed at this point because now technically we'd have to break structure to the downside to be able to make this move happen. And I don't want to have limits on these levels. So I'm just going to remove that order at that point and just going to watch price now. So ultimately, you know, we've tapped into demand. Ideally, what this means is that this high up here is technically going to be weak because we've failed to break the low. Okay. So here, let me just label this up. Week high. And during the live trading session, I don't know if you guys know this about me from previous sessions and stuff like that, whether you've had a one-on-one with me or you've been in a live trading session or a backtesting session prior. But man, I talk to myself. I talk to myself throughout the whole session to the point where I drive myself crazy. I sound like a fucking idiot sometimes, but I'll annotate my chart like this, like throughout the session and say, okay, well, this high is weak. The whole idea is that we've tapped into this demand and we should actually map this out and put this in here. Is okay, well, we've filled this imbalance. Yes, we have equal lows. It's going to get ran as liquidity once we actually tap into our POI demand. Okay, we had a supply to demand kind of flip over here. We never ended up tapping into this, but anyways, long story short, now we're moving up, right? So week high, let's just see what ends up happening up here. Okay, we're not looking for any of these trades. This is heavily counter trend. I like to pick the bottoms and stuff like that. What percentage of your trades are you counter trend with this strategy? 50-50, 90-10. So it depends on which time frame you classify your pro and counter trend. So personally, all of my stuff is based off of 15-minute structure. So I would say 75 to 80% of how we trade is counter trend. And the reason why is because pro trend moves happen so quick, right? Pro trends, like 1 day a week is probably when pro trend is actually happening. But yeah, ultimately, like we're just looking for higher time frame intention moves. We can trade from here up into POIs and stuff like that, but we would never stack orders. So if I got into this one for whatever reason on like a 5-second flip or whatever it might be, tap in. I'm not looking for scale-ins. I'm not looking for any scale-ins to go counter trend. I'm looking to basically target my area, and then from there look for my criteria to basically target all this shit for liquidity. But I would say a good 75 to 80% of the way that we trade, because we are session traders and we're not POI traders, is going to be counter trend. So we have to trade what's available. We have to basically learn to make lemonade with lemons, is kind of how the saying goes. So right now, again, I'm not really looking to, I'm not taking shorts here. And the reason I'm not taking shorts here or looking for shorts here is because if we've reacted to this level down here, this high is weak. If you're looking to take shorts here, you're going to get smoked, right? This is going to build liquidity, pull back, push through, do the same thing up until we hit our POI. Okay. So we're going to play price. Boom. Induced up. And it's to no surprise, man. Like, I mean, we've reacted to the low. We've basically not been able to break it. So it's simple. We're expecting this high to get ran. So now what's going to happen is I'm just going to move this like this. There's no supply and control from here, right? We're not expecting supply to take over the market from here because of the equal highs and because of the weak high. So don't be drawing supply levels out at equal highs. Okay, look at this. We put in how many guys, first week. I often joke about this, and I talk to Brad about it all the time from Phantom, but we, just to kind of joke around here. First week of Phantom, you signed up for the course, you're all excited, you're learning smart money concepts, you see a fucking order block sitting like this. How many people are taking shorts at this, even though it's still double top? because you just learned about order blocks. Everybody's hot and horny, ready to fucking take the first trade they possibly can, right? So this is the thing is, even though there's an order block, what looks to be an order block, this is not an order block because this didn't take liquidity. Order blocks, in my opinion, need to take liquidity first and then be able to trade away from them. Okay, so this is not supply. We're just going to leave this here. I'm going to keep playing price. Okay, we come up. Boom, start melting off. Okay, so this is where things get interesting. Could you have taken a trade here? Sure. Am I personally doing it? Absolutely not. Why? Because we're at equal highs. This is all going to get induced, in my opinion. It doesn't mean it will. It just means, in my opinion, if I'm going to be putting $1,000 on a trade with my FTMO account, there's absolutely no way that I'm going to risk it at equal highs. I'll tell you that right now. So let's push forward. Now we're in a demand zone. So ultimately, if we're in this little demand area that took out the supply, then technically we're not expecting this area to kind of hold. So let's just keep playing price here. Okay, you can see that we reacted to it, came back up. Okay, probably 15-second flip in there. Remember, the whole idea of this trade, this is why I like to keep my stuff annotated over here, is that this high is weak, okay? Are equal highs and lows your favorite type of inducement to run? You know what? I don't think I have a favorite. I think my favorite thing to do is understand where liquidity is that needs to be taken to go in the opposing direction, whether it be equal highs, whether it be built up mitigations, whether it be trend line, whether it be whatever. There's not necessarily a favorite. I do like equal lows and equal highs because they're really easy to see. But a lot of times market structure is king. Let's say this is a higher time frame. A lot of times we'll tap into this and just run. You know what I mean? So it'll get you in a position that it's like, well, fuck, we didn't actually sweep it, right? Once we broke supply after failure to break the lows, when we considered the week, once we broke supply after, do you want to just cue your mic on, Felix, and just show me where you're talking about, bro?
Yeah. So can you hear me?
Yeah.
Yeah. So what I was referring to is this. So once we broke this supply and didn't break the low, that's when we consider this was a weak high.
Well, we're exactly. Once we get this reaction right here at the extreme demand and we break through the opposing direction, as soon as that happens, what is that known as? It's not quite a change of character because we didn't grab liquidity, but it's a break of structure to the upside, which shows that the sellers are actually not quite in control of the market, meaning that we still need to grab this liquidity up here. And the reason the market needs to grab this liquidity is it can't actually force itself through here if there's order still up here. In order for us to continue in this direction, we first need to get rid of the opposing direction.
Okay.
Cool?
Yes.
Awesome. Thanks, man. Just get rid of your drawings too, if you wouldn't mind. Awesome. Thank you. Okay. So at this point, a lot of people looking at confirmations, they're saying, well, maybe this broke or this broke or this broke, whatever the fuck it is. Ultimately, again, this is where patience, this is where the love for the game is really going to play through, and just being patient, waiting for that setup, right? And if it means that you sit on your hands for the majority of the actual session, then so what? Who cares? But just know your limits, right? So let's just play price. Okay, what are we doing? We're building equal highs here. What is that? That's probably going to be liquidity. What do we got here? We got liquidity. Boom. Okay, cleared out all this stuff right here. Good. So now what we're looking for is basically a breakthrough of this, right? See if we get it. Okay. I remember trading this too, and this was my first day, like I said, with the My Forex one, I guess, challenge or whatever you want to call it, phase one, or evaluation, I think is what they call it. And I was watching this thing, and I was like, "Fuck, man! Like what if this just runs? And this is just like a really easy trade, and I could have just taken this to the bottom and essentially taken 8% out of the market right here." So I'm just watching this and I'm like, getting a little bit anxious at this point. So if you look, technically, we've now broken this structure point right here. So what do we do? Are you still waiting for here, or are you taking this, right? Ultimately, there's really, I don't want to say there's no right or wrong answer. I think the correct answer is to always wait for the liquidity on the buy side to be cleared before we actually take sell side, especially because we're aligned with higher time frame intention. So what do? See, you tap into here. Okay, a lot of people might be taking this to potentially go short because this is known as that demand turning into supply, breaking structure flip, right? So we'll see if we get a reaction here. Can't remember if we do. Okay, so we tap into it. Okay. And tap into it again, and it's going to be game over. There it goes again, right? Okay, so what do we got here? Now we got more equal highs, right? So this is where things are starting to get really dicey, and we're going, okay, well, fuck, like what's going to happen here, right? We're ranging on a higher time frame as well, right? All the way across like this. So we just sit and wait, right? Sit and wait, candle by candle, let this thing kind of show what it wants to do. Now we have a small break of structure. How many guys are looking to fucking trade this now? But we got all this resting liquidity here. Watch what happens. We're going to take this. Okay. Now we've taken all the sell side liquidity, right? You see how these equal lows right here just got taken, right? So if equal lows get taken, okay, what's the next thing that's going to happen? Anybody want to guess? Just draw where it is. Bingo. If you get rid of all of the sellers in the market, okay, on the 1 minute chart, if you get rid of all the sell side liquidity, the likely thing to happen next is to then come and take the buyers, right? And this is a true change of character when we sweep both sides, break structure, and then have an area to trade from. But I'm going to show you a little cheat sheet once we actually, if and when we come up to this level, how I like to trade these areas once we tap in, if and when we tap in, of course. Remember this day. Yeah, I think everybody does. This is I believe this just tapped and ran. It didn't even give too much to actually get into. Maybe it did. I'll have to double check on the once we actually play it through. But let's see what happens here. Okay, so we push down. Okay, and then we start to come back up. Nothing to trade yet, right? This is a break of structure. This is a liquidity grab. We still have all these equal highs sitting here like this. Like personally, I am just so far from interested at trade. If you're looking to trade equal highs and your FOMO is that bad, man, you got to take a step back. You got to take a step back and just realize what's going on. You know, we've taken this. What does that mean? Now we're going to come take this, right? Anytime we sweep one direction, usually we go the other direction too. Okay, so there you go, reacting to demand. You could have probably taken something here because we've now broken right here, right? So if we look at this on like on a lower time frame, depending on how aggressive you are to take things up into POIs, there might be an actual move here that you could have said, okay, well, ultimately, you know, demand is in control from here. We've broken this structure point right here. You could have maybe put a long position on from here up into here. But personally, it's just the risk reward isn't there for me. So I'm just watching this price kind of unfold. Okay. What do we got here? We got equal highs. We got equal highs. We got equal highs. A lot of reason for price to go up. Okay. Cleared the first set. It's good. Okay. Tapped into the wick. Get a reaction. How many people are jumping down to the 5-second chart trying to get in on this, right? Forgetting about all the liquidity that rests above here. So keep playing. Okay, tapped into technically, you know, break a structure. What do we got? We got demand, right? Tap in. Up we go. Equal highs again. Boom. Okay. So this is where things get interesting because this is likely where we can potentially enter, right? So if we think about what's going on here, you know, ultimately we've kind of come up into, you know, this sort of region right here. I'm not going to bring this down like this, but I am going to take this and just kind of go like this and just kind of narrow this off to this level right here. And supply. So I like to stack my supplies. I should have done this at the beginning, but ultimately I like to have my 15-minute POI. And then if there's something clean on like the 5-minute, I don't know if there was on this. Yeah, there was this wick right here. But ultimately, when you go down to the 1, you can get a little bit better picture that, you know, this up move right here before the down move is ultimately what I was looking to trade. So typically what I used to do was actually put limits on this, but now what I like to do is just kind of find the, you know, the 1, 2, or 3 candles, whatever it is that do that up move before the break of structure. And then now what I'm doing is I'm using market executions on the seconds flip. So as soon as we cleared out this liquidity right here, okay, as soon as this happens, if you don't have seconds, that's totally okay. I'm going to show you how to do it on the 1 minute right now as well. But as soon as we did this, now we've induced this level, right? So we've now induced this top, right? We've gotten rid of all the liquidity, and now all we really need is to be able to see some sort of a break. So in order for us to see those finer details, I find it's easier to do it on the 15-second. So ultimately, if you look right here, right now, you can see that technically this is now broken, right? This little area has broken right here. So as soon as that happens, personally, what I'm looking for is as soon as this starts pushing up here, my order is getting set. I'm putting a stop loss just above here, okay? So let's go like this and, put something up around here, 2 pip stop. Okay, so on the changes of character, on the original changes of character that happen, a lot of times what I will do is allow myself a 2.5 pip stop. It doesn't say that in the trading plan. I don't think. I can't remember if it did, if I put it in there or not. On the original change of character, I will allow up to this, or I'll get a little bit more aggressive and I'll just try to take like the 50% of it or whatever it is and give myself like a 1.6 or 1.8 or whatever it is. So obviously we're going to be targeting this low as more than likely weak right here. Let me just go up to the 15 really quick. So this whole trade idea is based off the fact that this low right here should be weak, right? So ultimately, what can we aim for? Well, we're going to kind of aim for that next level of demand that rests kind of right here, right? This is the next little pause in the market. This is like a very conservative target. You can basically take like realistically, your first profits that you kind of take off the market should be right around this low in this region here. Ultimately, like you shouldn't even be looking at partials. You can take partials at like 1 to 4, 1 to 5 or whatever to kind of keep your stop loss open if you wanted to. But usually what ends up happening, because we just had such a huge liquidity grab to the top side, we're never coming back up here to mitigate anything. And that's just the way things go. Tyson, how do you know it's a change of character or a pullback to go into the POI, considering right now when we're at the top? Okay, it's a good question. So personally, with this exact setup that's showing right here, the likelihood of us going any higher is not very good. And the reason why is because we've just cleared these equal highs and immediately reacted on the 15-second chart. So when you see this happen, more than likely what's going to, like, let's go down to the 15-second. When you see this right here, this little break, this is game over. Ultimately, all we've done is because we've pushed out all the buy side liquidity, it's game over for this. There's not going to be anything above here. And the reason why is because there's no reason for anybody to be breaking out. The breakout traders are here, right? The stop losses are sitting above here. We've already facilitated that move. So in my opinion, again, with this given setup, exactly what we're looking at right now, this is exactly how I entered my position. Now, let me just go down to the 1 minute, or up to the 1 minute rather. And what I'll do is I'll just actually leave the seconds chart out for a few seconds, and we'll see if there's a better entry for us to kind of get in here just on the 1 minute. Let me just zoom in here. Okay, so start playing price. Okay, so now we get that pullback, right? That initial pullback. So as soon as we, boom, something like this, okay? At this point right here, it's basically a no-brainer. Supply is now going to be controlling the market with this huge pullback down like this. What you got to remember is there demand here? Of course there is. Look at all the resting liquidity. Look at all the resting liquidity, all these different things that are happening that are aligned with higher time frame intentions. So personally, yes, there's demand here. Okay, I get it. 100%. There's no ifs, ands, or buts. Again, because I used the seconds flip, I was able to get in a lot sooner and move this over to break even a lot quicker. That's kind of the advantage of using that seconds chart. However, if you don't, you could look at this level right here as potentially an area to get into your first position. So let's map this out right now and just look at whether or not we can get into this. Oops. So supply in this region right here. Okay. And yeah, let's do something like this. So remember what I said, 2.5 is typically what I'll allow myself on the initial change of character, or what you can do is just kind of wait for a little bit better risk reward setup, depending on how you want to do it. A lot of times what I like to do as well is put myself in a position to take 50% of a block. But on the change of character, I just want to get tagged in and be able to at least say that I got in, and then from there I can scale my positions a little bit later. So something like this, we'll see if this taps in. Okay, so you can see we just barely got tapped in here. Okay. Then we start to push. Okay, so at this point, if you, for whatever reason, you didn't get into this first trade, you just weren't sure, ultimately, this is what you need to look at right now, okay? We've basically departed from this demand level, right? So we've tapped into demand, we've come into supply, and now we've done what? We've now, and these are like the little finer details that I like to look for. What is this right here? It's a small break of structure. Is it a lot? Is it enough to, you know, substantiate getting into a trade? Well, I mean, over the course of the next 6 weeks, you're going to find out. I already know it is. This is why I teach the way that I teach, and this is also the way that I trade, right? So right now, what I want to do is say, okay, well, let's just print one more candle and see what happens here. Okay, so if you had to take a guess right now, where would you put your order? If you had to put one right now, should be pretty simple, right? Now, the question is, so we're what, about 40 minutes into this lesson, and we've what, only gone up to about 9 o'clock? Yes or no? Would you actually, after us talking right now and throughout this last 40 minutes, would you be able to put, would you actually be able to, if you had a $100,000 account with FTMO, with your name on it, would you risk $500 on this trade right here? Cool. I would, I did. Man, and this is just understanding, this is not just market structure, this is not just liquidity, this is not just mitigate, this is everything. This is the whole narrative. This is the exact piece of the puzzle that we just spent all this time waiting for. So if you know that once we pull through and we break through these equal highs and we take liquidity, mitigate a POI, and then immediately break to the downside, man, it's game over. So let me show you on the second chart what this looks like so that it's a little bit easier to kind of see. So you can see that once we've basically gone like this, okay, we've broken this area, you could have got in here, broken down, could have got in here, broken down, where are you going to get in? Probably in this range right here. So second chart is going to show you a little bit more detail, especially if you didn't want to get in because the risk reward wasn't there on that initial change of character. So let's just play this through. And usually what I do is I'll set like a market order somewhere in this range like this, right? Basically, I'm going to set it maybe mid-range or whatever, you know, try to get in and around this region. Cool. And then again, we'll find our target in just a minute here, but we'll just see if this ends up getting tagged in. There you go. So tagged into the trade. Let's go back out to the 1 minute. And we'll start seeing what happens. So we get the push away. Okay. Boom. All kinds of liquidity there for us. So guess what? It's real simple. Look where we're at right now. Where does supply control? Here, let me just get rid of all this shit right here. Break the structure right here. Okay. Oops. Where's supply control the market? Yeah, it's right there, right? So guess what? If you missed all of this, okay, if you missed all of this and you were just nervous, guess what? Now we've got the break, right? Can you mark the change of character at the entry, or was it just a flip? Well, this is a 15-second chalk, right? This guy right here. Let me just go like this. Where's my, so right in this region, there was a 15-minute chalk or 15-second chalk. In terms of the 1 minute, this is the true chalk right here, right? So 1 minute, this is your chalk. Boom, we've now broken the structure point right here, taken this out, and now supply controls the market from an unmitigated standpoint right in this level right here. Make sense, Stephen? Cool. So now that we've done this, this is probably the more likely area that people would start to consider getting in. What am I looking for here? Change of character, downside. Okay. So would you put an order here? Steven, you're my man right now. Yes or no? Just kidding, Steven. Cool. Yeah. So like personally, man, there's absolutely no issue putting an order sitting right here. Whether or not you want to, totally up to you. But in my opinion, this is mitigated, right? So we got to think about the things, oh my God, these concepts in terms of mitigation as well. This is mitigated. This is mitigated, right? The only thing that's left is right here. And this has a little bit of imbalance to fill too. It's perfect. Nothing, like in my eyes, nothing can really go wrong here. So I would put either a limit, or yeah, you could just wait for a market order once we tap into the block, right? Depending on what you want to do. So what was this? Chalk. Okay, so let's go like this, and just kind of go something like this. Okay. 2 pip stop. Okay. Something like this. It's perfect. So 2 pip stop after the initial chalk, which is up here for me on the second chart. But technically, you could leave a 2.5 pip if you really wanted to, because this is technically the 1 minute chalk. Could you put an order right here, right where I put it there, Stephen? Cool. Awesome. So here we go. You know, kind of do something like this. Let's just see if we get tagged in. Okay, tagged in. Close call. Make sure you're adding your spread to your stop loss as well on the sell side. So if it's a 0.2 pip or whatever it is, zero spreads or raw spreads at 0.5, 0.7, make sure you're adding that on top. Okay, broke the low. Bingo bango. You know, ultimately, I don't know if I'm going to break even yet. In one of your live, I remember you said that you don't want to put order where your stop loss is liquidity in case equal highs. Am I missing something? Whereabouts here? On these right here, these equal highs? You can cue your mic if you'd like. So you just mean like I don't want to put my stop loss here? Well, this isn't really equal highs, right? Like this is very, very low time frame stuff. Ultimately, what you could do, and what I've said in the past too, I'm just showing you as examples. Probably what I would be doing in this area would be taking kind of like the 50% of this and then leaving a 2 pip stop, to be honest, just to be able to stay above this little liquidity line. But ultimately, this is where supply controls the market from. This is where the imbalance sits. So that's, yeah, more than enough. I don't know whose check mark that is, but if you wouldn't mind, thank you. Yeah, if you're worried, like, I mean, you got to remember, like, equal highs are relevant when it comes to, you know, like several of these, right? You don't want to contribute to these stop losses, right? You don't want to contribute to that and become liquidity. This kind of stuff, this is all order flow stuff, right? We're just process of mitigation, process of mitigation, process of mitigation. Now, the only time that we typically will kind of break this mitigation process on the way down on the 1 minute is once we take out swing structure. Once we take out this swing low, then we have to run all this stuff for inducement, right? And basically induce all these levels, get a lot of people trapped on the buy side, and then we'll put in that lower high and then put in that next lower low. So yeah, when it comes to getting into things this early in the leg, usually it's process of mitigation unless there's something up here that's not mitigated. Cool. Awesome. Okay, so let's just talk about targets really quick. So again, targets, I mean, depends on how you want to do it. 15-minute, you know, there's kind of like a demand region like this, you know. Again, you know, we're targeting a weak low. Like the whole thing is that we're targeting this weak low and we want to target the next unmitigated demand. Is this demand? Well, I mean, maybe on a lower time frame there's demand in here, but ultimately the demand kind of starts in here. So I think I would be targeting kind of like this level right here, and doing the same thing with this guy. Okay. I didn't take both of those. I only took one of them, but I'm just trying to show you how many different options there were to essentially get yourself into this trade. And a lot of people were trading this as demand, right? That just adds to those stop losses because higher time frame intention is suggesting that we put in a new low. Okay, so really the only area that I'm kind of concerned about in terms of demand would be kind of down in this region right here, because this is the extreme of the move that technically put us into a new high, right? If you look at this, this is technically a break of structure to some degree, and we can expect some sort of a reaction. So once we get down in this level, all we're doing is making sure that we're staying away from putting any kind of continuation patterns on, unless there are kind of like a demand turning into supply flip, in which we can then trade away from. Okay, let's keep going with price. Okay, so at this point, this guy right here is definitely at break even. Okay, and this guy right here, I'm not putting at break even up until we do something like this. And then I can say, okay, well, technically, in terms of, again, the mitigation process on the 1 minute, going like this all the way down until we break the swing structure. Once we basically put in a new lower high on the 1 minute and a new lower low, breaking this structure, then I can basically move this over to break even without having to worry about us navigating up into this level up here, okay? So pulling back. Okay, we've now broken. So personally, I think I would be okay with throwing this over to break even, depending on where we're at on the chart. Let's just have a look at this. 1 to 3. No, I'm not taking partials just yet. Let's just keep playing price a little bit further. Okay, come back up, swept the high, and then pushed away. So once this low gives out, then I'll, there we go. So now at this point, yes, we got relatively equal highs. A lot of people worry about this, but ultimately structure controls the market. Liquidity is just, one of these byproduct things where, once we maybe come back up like this, ultimately what that's going to provide is if we go to break even at this level and all of a sudden we decide to, sweep the high one more time, at least we're break even and then we can get into a better risk reward trade up here. So, don't be scared to go to break even if it's a little bit premature. If you get wicked out, big deal. Look for the next setup, right? So yeah, at this point, I would be more than confident. Let me just go like this and I'll just kind of put these in here. Stop loss. Stop loss. And cool. And then same thing. So now this guy right here, especially when you're running 2 positions pro trend, you can either keep this one at break even, and at least this way, if we do navigate up here and we do tap into this block right here that's sitting here now, at least you still got this position running. Again, totally up to you on whether or not you want to manage this way. The only thing I really don't teach concretely in this course or this masterclass is management. And the only reason why is because every single trade is completely different. So with this one, personally, what I would do is break even on this guy, break even on this guy. At least this way, if we come back up and tap into here and we get tapped out of this one, this position is still running. Okay. So yeah, and this is just at this level. Once we start making some lower highs and lower highs, then I'll start managing both positions to different levels, or sorry, the same corresponding levels. But we're right at the beginning, and very quickly we could reverse. So I just don't want to put myself in a position. Okay, so really at this point, supply controls the market here. Why does it control it from here? Well, we broke structure here. So technically, of course, I mean, this could blast right through, but just for kind of demonstration purposes here, if you took this like this at the beginning of this block, stop loss, just above here. Now, this is one of these cases, who was asking me, Sebastian, I don't think I would keep my stop loss sitting like this. And the reason why is because this could easily wick and come up into this wick up here. So I would have to keep my stop loss just above this level. And then that would obviously change where I would enter my position. So this is a good example to just kind of show that I would not contribute to this because this may end up getting wicked out. I would obviously want to cover this wick right here. So that's an example of that. Again, I didn't take this. Actually, no, that's a lie. I did take this exact position. Now that I'm thinking of it, this was my 11R that I took. So if we just go like this, and just for argument's sake, we'll put this like this. I ended up taking about the 50%, and then just stop loss just above here. Cool. Come back down, something like this. And play price. Okay, we get the push away, respecting the low, and we've broken the low. So now at this point, again, there's a few different things you can do. Let's just remember where our structure point is here. I always like to kind of draw this guy in, because once we break this low, we got to remember that we're more than likely going to pull back to one of these levels, right? So we'll have to figure out which one it is once that actually happens. But let's just keep playing price here. Okay, so remember now we're in this sort of extreme demand level. This is the only one that really concerns me. And the reason why is because this is technically the origin of the move that put us into here. Now we've got all kinds of resting liquidity, resting kind of sitting like this. We're expecting a new low to get made. However, we could see some sort of a reaction at this level that could potentially take us out. So if that's the case, in something like this, where we're getting into, excuse me, the lower portion of this discounted leg, then what I would probably do is just be a little bit more aggressive with my stop loss and just move this over to break even. Okay. So keep this at break even. That way, if we produce a reaction that maybe sweeps us out up into here and just takes out these highs and then continues, at least this way, we're not overexposed. Cool. So stop loss. Okay, we just melted right through it. Okay, so nothing to really worry about here. Okay, get the push up. We got the inside bar sitting right here. And there it goes. Okay, so start to melt down. Technically, this is some sort of a, demand turning into supply flip right here. If you really wanted to take something this deep in the leg, it's totally up to you. Like I said, we're not expecting a decent pullback up until breaking this low. Once we break this low, then all bets are off, right? Then we can start to worry about what levels to trade from that aren't necessarily built up mitigations. So let's go like this. Oops. Supply controls the market from this level right here. Now, again, you don't need to be trading. Like you should have at least caught one of these. 1, 2, 3. There was 3, 4 different options, really. You could have taken this 1, 2, 3, 4, 5 different options that you could have essentially got into at least one of these. So hopefully this will be a little bit more clear this week when you get back on the charts. You'll be able to see these things kind of line up a little bit better. Okay, so let's play price here. Okay, break the low, come back up, tap in. Okay, same thing. Okay, so now we've broken the low. So this is where things get dicey. There's going to be a bunch of liquidity that rests underneath here, right? We've already established that. That's what our whole narrative was based off of. So now we've just got to figure out, okay, well, if we got into this trade right here, just for example, let's just actually put this guy in here so that in case you were the guy that got in, let's say you got in at the 50%. Oh, something I should talk about too really quick before we go any further. The only time I take the 50% of candles is if my stop loss is, let's say in something like this, okay? Let's say my stop loss was like 2.4 pips. Well, that doesn't fit my trading plan personally. So I'm not going to be taking this trade. But if it's something like, let's say it's further up in structure up here and it's a nice high risk reward trade, all I'm doing is saying, okay, well, you know what? I don't want to be not in this trade, but I also don't want to break my stop loss rule. So what I'm going to do is just kind of bump this in till either it hits 2 pips or just take the 50% of it because it's a big enough block that we should be able to fill portion of it. Okay, so that's kind of how I look at things. Again, right or wrong, I don't know, but this is typically what I end up doing. So again, now we're going to target the same level. Obviously, you would never have this amount of scale ins. You would probably get a margin call depending on how many positions you have open and how much you've risked per trade. But I'm just trying to show all the available stuff that fits into our trading plan. Okay, so we start to kind of come down. Okay, so now we're starting to break up to the upside. So this position should be a break even. Like I said, once we once we break these, like you have to remember that our entire trade idea was based off of a weak low, right? So this weak low right here has now been taken. So what does that mean? Well, if we've already taken all the resting liquidity that sits underneath here, and now we start breaking structure to the upside, we've got to be very, very careful as to what the next move could be, right? So like I said, typically what we end up having is these deeper pullbacks. So if we were to look at this right now, let's just take off my drawings. How do I do that? Close these drawings. You can see right in this level right here, now that we've broken this level, what's the only unmitigated area? Well, there's this guy up here at the origin, but there's also this wick right here that I really like. So let me just put my drawings back on. And you can see how this correlates now with this guy right here. Okay, oops. So if you start to look at this, and we're going to go down to the 1 minute now. There's a lot of drawings here. Let me just clean some stuff up. This can go to break even, but now you can see this larger, and this is just represented by this range, right? So when you start to see this and you say, okay, well, this entire range is an unmitigated wick, and essentially my take profit hasn't been taken yet, I would be looking to partial at this point, probably at this low right here, like I said, and the rest can run. But once you start to see this kind of happening and you realize that this entire range still needs to be mitigated, well, then it's like, okay, well, more than likely this is going to get ran as liquidity, this little area right here. And if that's the case, you could potentially, and this is the only case where I would do this, depending on how much money you want to make here, but I would probably open up my stop loss. And that's exactly what I ended up doing. I took my partials right around this level right here, and then I just let the rest leave the stop loss open. That covers the stop loss and all that kind of stuff. And I'm going to show you how this ends up working out shortly here. So let's just push this through. Okay, we come back down, come into the range that created demand, right? More than likely we're going to get a reaction, right? Okay, so stop loss was at break even for this. So this got taken out. You didn't take any partials or anything like that probably on this guy. Let's just go like this. And now it's like, okay, well, this doesn't work. This supply is no longer a valid area. We know that this is going to get broken. Okay, so again, this is the only circumstance where I would leave this open. And this is where that inducement kind of comes in, right? This is all going to get ran as liquidity, and that's exactly what happened. Okay, so we come back up, produce a reaction. We sweep the high. We respect the low. Okay, we break the low. So now we got to kind of figure out what it is that we want to do here, right? So let's just see what ends up happening. Personally, I'm not like, this is not quite enough to do a scale in just yet. I want to be able to see this get mitigated a little bit further personally before jumping in. Okay, so there's that, inducement, boom, swept into this. And then we can start looking at potential trades here. Okay, so the low needs to break for me on a lower time frame. You can probably get in on a second flip here. Let's just have a quick look. No, nothing actually. It's all right. Let's go to 1. Okay, start playing price. Okay. Boom, we get the break. So what does that mean? Well, what it does mean is that all of this was induced and then broke structure, correct? So if that's the case, and that's what we've done, then where can we put a limit right now without hesitation? Cool. It's pretty easy stuff. I mean, obviously in hindsight, it's a lot easier, but building the story, understanding that one of the foundational pieces for this strategy is marking out the weak low, right? Once you mark out this weak low and you understand that once we take all the liquidity that rests underneath it, well, then it's a matter of, okay, well, once we put in a new low, what do we have to do? We got to put in a new high, right? So once we put in a new high, what are we expecting to do? Expecting to put in the new low, right? So market structure is everything, but you need to know how to map it, right? So always mark out your low point. And then once we break through that, expect a deeper pullback, right? To be able to put yourself in a position where you're not taking these silly positions this late in the leg when you're going to get swept out. It's just a waste of time. not so much time even, it's a waste of energy because you're going to be sitting there shitting your pants the entire session while all this is printing, hoping to God that you're not going to get taken out and you're on, like, let's say your last 3% of FTMO and this is the trade that you've taken, right? Okay, so I always like to see, so again, this is like a, I don't know if this is a M5 POI. I always want to see a sweep into a POI, okay? Doesn't mean it always happens, but it means that I typically will not get into any kind of trade unless we give a reaction, a sweep, and then a break. That's the most reliable area for me. Okay, so what is this? This is a sweep and this. So what do we call that? It's a change of character, right? So if that's a change of character, let's just map that out. Change of character, right? And then we've taken the top. So now we have this supply sitting right here. Now, with something like this, putting a limit order, no problem. No problem at all. We're aligned with higher time frame intention. The problem with this is I want to be able to cover this high. And the reason I want to cover this high is you got to be really careful because this entire area is an area in which we can pull back from, right? And kind of mitigate a little bit further. So I would probably do something like this, or I would wait to kind of come up and then take some sort of a confirmation entry on a seconds chart. Again, you could maybe do something like this and just do like a 2.5 pip stop like this. Totally up to you. I just like to be a little bit more safe, especially with this range. We are not quite 50% mitigated. So let's just go like this. Yeah, just to say 50% mitigated. So yeah, you'd still technically be okay. So maybe I'd do something like this, maybe take 50% of the block and give myself like a 2 pip stop. But ideally, I like to cover this kind of range up here. So if that means bringing us into something like this, 2.5, or you just kind of risk it for the biscuit and take the beginning of this block and give yourself a 2.5 as well. Cool. Cool. So let's go like this, and now we're going to expect to make a new low, same profit target. But yeah, I typically like to cover the high of the range. We'll see how this plays out here. Okay. Get the push away. Okay. What does that mean? For reacting to the low, chances are this high is going to be weak. We're getting into about 11 o'clock here. This is like the last portion of the trade that I'm going to show. And then we'll do some questions and stuff like that. Typically, I don't trade this late, but I just want to show this entire piece of price action. It's definitely important to understand it. So we're at the highs. Okay, start to produce a reaction. We push through, boom, tap in. See, you would have been taken out. So this is why I like to, I always like to cover the range high. Okay, probably would have looked at this entire range as potentially, first and foremost, I would have been at break even if I would have got into something like this. Let's just go like this guy right here. Okay, oops. That's not what I wanted. This one right here. So if I would have got into, let's say the 50% of this range pushed away, I'd be break even no matter what. I just don't like taking unnecessary L's. So now on this level right here, a lot of people see this as a break of structure, but we're just pushing a little bit further into the POI, right? So let's go into the 15-second and just see if there's anything here. We've basically taken liquidity one last time. You can see the break right here, and then something like this is kind of what I would look to potentially get in, provided it showed itself, which it doesn't. Okay. Anyways, long story short, you might have taken an L on this guy, and it's normal, man. We all take losses. I mean, it is what it is. But with, I guess the moral of this entire story is that when you're looking at taking trades from a supply level like this, while we're in a larger supply, it's always good to consider the fact that, okay, well, we haven't actually taken out the low, right? This low point creating a strong high. So more than likely what's going to happen is, even though we've changed character, there's still a possibility for us to sweep that top side again, right? Or just mitigate this 5-minute wick a little bit further. So again, it's devil in the details, right? There's no right or wrong way. This is all going to come with a little bit more experience throughout the, the remainder of this course. But ultimately, that's kind of what I would be looking at is just being very careful about these areas to take trades, especially because we've broken and then we're immediately coming back. It looks like we've taken liquidity here. And as soon as we can't take out these lows, that just means that more than likely the high is going to be weak. So we'll just play this out, see if we end up going to our take profit and reacting to the low, no surprise, right? Now, ultimately, in order to see a change of character here, we need to see, supply get taken out, right? This kind of supply region right here. Okay, took out the low, and there it is. Cool. So that's pretty well it. What do we got here? 13, 11, 9, close to 30 are available. Guys, this is lesson 1. It's a pretty easy pro trend lesson. I figured we should dip our toes in the water, show a nice easy piece of price action, understand the strategy. I mean, ultimately, the big takeaways from today are, when we change character, we usually come up, mitigate the extreme, and then it's just process of mitigation. Again, this is when we're aligned with higher time frame intention to put in a new low. Once we break the low, ideally what we do is, depending on how much liquidity is resting underneath here, and that'll only be dictated by the side over here, you'll be able to say, okay, well, once we break the low, we're expecting to see a change of character that we can then trade into a POI. So we could have easily taken longs back into here. Personally, I don't like hedging positions, but if you had hard take profit set, like let's say just at these lows, and then we change character, then you can easily take this back up into here and then basically take this back down to the downside afterwards. And this is just basically only available during New York, right? This is all we get. So it's a matter of making lemonade with lemons. So I hope this is helpful. Again, this is just scratching the surface of how we use the strategy day in, day out. But yeah, just wanted to show a little bit more of like a pro trend, a little bit easier move. They don't happen as often. They happen maybe one day a week that aligns with our POIs and stuff like that during New York. But at least you can see it happen. It does happen, like I said, once a week or so. And then we'll get into more of the complex pullback stuff next week. Do we have any questions based on something today, stuff that you want to know about the masterclass moving forward? If you do, just shoot a message, just say, I'd like to chat, and I'll get you to cue your mic. Cool, no questions? Well, listen, guys. Oh, may I ask? Absolutely, throw your mic on.
Hey.
Hey, how are you?
I'm fine, thank you. Okay, this one. I see from this side to this side. Is this the complex pullback?
Yeah, basically, and yeah, exactly. Because we had the equal highs building across here. This is a complex pullback because this is not market structure, really. Market structure is from here to here, right? So as long as we don't break above that level, we're still in bearish market structure, right?
Okay, so the one that I want to ask is why you put the change of factor here and not somewhere around here? This is the, can you put on 5 minutes?
Yeah, give me a second. Oh, let me load here, 5 minutes.
Okay, so I think this one, yeah, from this one.
Well, so change of character, actually, you know who says this really well is Precision Markets, Rob. When we are aligned with higher time frame intention, okay, when we are pro trend, okay, we're expecting to put in a new low. 1 minute change of character off a POI is more than enough. Okay, when we are counter trend, let's say we're coming in like this, we want to see a 15-minute break of structure. Look at perfect example is, let's go over to the 15. Okay, we are pro trend, we are making higher highs and higher lows. We needed a 15-minute chalk to solidify that we were going to go bearish. Okay.
Okay, so it depends on the pro trend or not. Yeah.
So pro trend, if we mitigate a POI after taking liquidity, 1 minute is more than enough for me. If we are counter trend, if we are bullish and we are changing character like this, I want to see a 15-minute break.
Okay, got it. Thank
Make
you.
sense?
Yeah.
I'll put that, again, I'm doing a few revisions to the trading plan. I'm hoping to have it out in the next, probably not this week, but maybe the week after. I'm just trying to dial in the seconds chart as well, but I have a couple refinements that I've made over the course of the last 6-8 weeks. So I'm going to update that for you guys as well. It won't be anything like crazy new. It'll just be little tweaks and refinements. So that'll all be in there for you.
Okay, one more thing.
Yeah.
This is the first chalk, right? The one that you mentioned in the beginning of the session.
This is the 15-second.
Oh, I see. So
Yeah.
the 1 minute is this POI.
Yeah. So the 1 minute chalk happened here. Now, the only reason I can use the 15-second here is because we took liquidity and mitigated. As soon as we did that, and then we showed a reaction. So here, let me just actually back this up like this. And yes. Oh, shit. Oh, boy. What do we do here? Okay, so let's go like this. And replay tool right around here. Okay, 1 minute. Okay, so let me just play price a little bit. Get us up into this area. Okay, so right here, if you go down to the 15-second, you can see the first chalk right here. And the only reason I could take this, and this is the actual trade that I took, is because we've taken liquidity and immediately, as soon as we took liquidity, we've broken back down. So what that means is that there's nothing left up here, because if there was more, you know what happens, right? When we break a low, what do? We just keep going, right? And the reason we keep going is because there's available liquidity. So if the only available liquidity was here and we've immediately retraced after, I'm more than confident enough to be able to take this block.
Okay, one last thing. The one you mentioned with the market execution, how do you set your stop loss and lot size?
Well, I have magic keys, so it automatically does it, right?
Okay.
So
we're
gonna I'm gonna do another lesson probably midweek this week. I'll host a poll in the Telegram channel, and I'd like everybody to go and at least consider purchasing the on-screen version. It's only about $30. And then from there, it's going to be a lot easier to manage your positions and stuff like that. And I'll be able to show you more in depth how I enter and exit on market.
Okay, thank you.
Thanks, man. Okay, hold on. Will you be adding continuation trades to the PDF? Yes, I will be. I think that, so what do I have on there right now? I'd have to take a look, but yes, continuations. So long story short, with the continuations, who asked this? It was Daniel. So continuations, as long as we don't break structure, okay, all we're going to do is keep taking mitigations, typically, right? So once we break structure, we usually come and wipe out some liquidity, and then we select a POI. So process of mitigation, usually I don't like to, I want to be on like the top 25% of the leg. You know what I mean? Before when I'm taking these mitigations, otherwise it gets more and more dicey and you lose risk reward. Yeah, confirmation, SD flip, and okay. So I'll, yeah, no problem. I'll add that in there for sure. I would like to ask some questions too. Go ahead, Zen.
Hello, can you hear me?
Yes, I can.
Okay. I would like to ask on the last zone. Let me annotate it over here.
Oh, let me just play price over to here. Okay, 1 second. Bear with me. Okay, cool.
Yeah, so
more?
So during this trade, right?
Yeah.
I realized that when you put an order and then you say that because this zone will tend to be wick off higher, right? So we need to place to cover the whole range.
Yep.
So compared to this is actually a higher time frame, 15-minute zone, right? So but previously on top there is also another 15-minute zone. Also there will be a range on the left, right? But why didn't we consider to cover it half of the zone?
Well, and just take a limit on there. Like this is the wick, right? So on the 15 minute, I've just selected this wick, right?
Yeah.
Here, let me just get rid of some of these drawings. Oops. Okay, get rid of all this stuff. Oops. Okay, so this is right here, right? So that's what I took, was the wick. And if you go down to the 1 minute, you could have, I mean, technically, if you wanted to take the 50% of this, you could have. However, I usually like to see confirmation entry in and around this region. I want to be able to see, I never really take risk entries that much anymore. I'd like to see sweep, bring up, come back into here, and then cover the top of the range.
Okay. So it means that just like here, when we enter a higher time frame zone, we just enter through this POI. If we get wick off and we just enter another trade, that's how this is as well, right? So let's say if this took us out, and then we just enter again if opportunity.
Yeah, well, exactly. You would just like you're talking if we get wicked out of it, like for whatever reason,
yeah,
exactly like what happened. Yeah, well, you just look for the next trade. I mean, ultimately, you understand the narrative here, right? The narrative is that we put in a low, we're putting in a lower high, and then putting in a lower low, right? So in between here and here, there's going to be all kinds of opportunities, same as what we just had here, the process of mitigation, right? So if you get wicked out, it doesn't mean the trade is invalid. It just means that you know, obviously we didn't cover, you know, the top of this, and we didn't realize that because we didn't take out the low from here, all it meant was that there was liquidity resting above, right? Across these equal highs. Man, you're going to get stopped out sometimes. I mean, okay. I don't have a 100% perfect strategy. You're going to get stopped. Like this is a good area to look. The only thing that you need to consider is, again, like look at the equal highs here. So what I would probably like to see in something like this would be, okay, I'd probably look for some sort of a continuation maybe down in here, because this gets pretty risky, right? This gets pretty risky with all the equal highs sitting here. You know, we got an unmitigated POI sitting here as well. I didn't take these, and for that reason, I was also a little bit later in the session. But yeah, 100%, man. I mean, ultimately, the trade idea is not invalidated if we do this and then break structure again, right? It just means that you managed a little bit too aggressively.
Okay, one more question is,
yep.
Can I say that today's lesson is, if we enter a higher time, we wait to enter at a higher time frame POI, which is something like this,
yep.
And then just based on order flow, once we break, we just keep entering if chance allows.
Yeah, I mean, as long as there's, so if there's something that's unmitigated above here, okay, let's say this was unmitigated, I wouldn't be putting orders on these just yet. I'd be a little bit nervous because once we break through the first structure point or this structure point here, more than likely we want to come back up here first before going down. But because the way that this lined up and everything is mitigated, we just take the process of mitigations.
Okay, thanks.
Okay, man, thank you. Thanks for the question. Okay, who else we got? Magic Keys tutorial later on in the classes would be awesome. I'm gonna do an entire, it's gonna be like a bonus lesson. Did the same thing with the November guys, Patrick, and it went really, really well. So I'm going to, and I have all of my presets as well for both 100 and 200K Magic Keys, I guess, parameters. So I have both of those CSV files already saved to my my docs. And you guys will get all of that when we actually do the run through. It's about a 45-minute lesson on top of everything that we already do. And I'll show you guys how everything works, how to manage positions properly with it, how to, you know, risk, double risk, half risk, cut your stop loss, all these different things. So I will be going through. You have confirmation? Yeah, so I'll do that as well. Hugo Boss, quick question. Go for it, man.
Hey, I just want to confirm you can hear me.
Yes, I can.
Okay, cool. So I've been following you for a few months and studying your content before this class. So I've had success in following, you know, your bias day in, day out. So that's a good thing in identifying like the correct weak highs, weak lows.
Yep.
I've been like, I've been getting left behind a lot with the 1 minute limits. And
Yeah.
ever since you introduced the seconds executions, that's kind of something I've been looking into. So like, if you can go to the 15-second entry you had at the top real
Yeah.
quick.
Right here.
Yeah, if you can go to the 15
Cool.
second.
Yeah.
I guess kind of like, so is your thought process, I'm sure on Magic Keys, you can basically like have.
So it basically has a marker like this. It has a
Right.
marker like this, and then a marker like this for your take profit. So this, one of them is going to be green. Your green one is going to be your take profit. There's going to be one that's yellow, which is your market or your limit order. And then there's going to be one that's red, that's your stop loss. And depending on how you drag and configure all of these, it automatically knows whether it's a long or a short position.
Right. Yeah, so my question was like, once you already have your bias set and you tap into that POI, as soon as, you know, you get the break here, you already kind of have an idea that your stop loss is going to be about 2. So you already have the line set up here.
Exactly.
And then once you see that it's like in this area and it's under the 2, you execute. Is that kind of the thought process?
That's it. That's exactly it.
Okay, perfect. Yeah, that's what I was thinking.
And man, it is such a game changer. You really aren't using Magic Keys properly up until you start getting into market executions, man. It is so seamless, so easy to use. There's no, you know, how many times you're sitting there on your fucking phone, you're watching TradingView, you're trying to dick around with lot sizes. Everything is automatically pre-calculated. So you can actually set your parameters for amount of dollars you want to risk, percentage of account you want to risk, or fixed amount of lot sizes. And you can basically, it's a click of a button on screen to be able to switch seamlessly between all of these. And it automatically generates that for you. So it's fantastic. As soon as you hit open calculator, it automatically plots your stuff. You click and drag your lines to where you need them, and literally just hit execute trade, and that's it.
Okay, cool. So that's kind of your process when you're doing the execution. You do that. You just kind of wait for it to get under the 2 pip.
That's
range.
right. That's right. Yeah. And it shows you your pip counter and everything like that. It shows you exactly how many pips away you are from your market execution. I'm going to be doing a whole. I'm going to try to do it this week. Try to do it midweek, maybe end of the week kind of thing. I'll get everybody together. I'm going to record it all anyways. And man, it's just such a game changer for management. And then the same thing with you know, when you actually have your let's say you hit 4R, you can automatically generate take 25% of your position off. So if you have to walk away, have a coffee, go to the washroom, whatever, you can pre-program it for 4R. 25% comes off no matter what.
Right. And then I don't know if it's just terminology. I know sometimes you call this like a flip. Is it just pretty much just the break and then?
Well, this is a chalk for me. This is and the reason this is a chalk is because it took liquidity and then basically broke down. So if this just went like this and broke structure here, this would be a flip.
Yeah. So this isn't a flip, right? This was just a chalk.
This is a chalk. Yeah.
Okay.
So a flip is exactly like this. Okay. So broke down, came back up, it flipped. It's basically, I mean, you know, we call it supply to demand or demand to supply flips. I mean, this is same thing as, you know, taking resistance and flipping into support or vice versa. It's the same concept, right?
Okay, awesome. Thank you.
Okay, man. Thanks. I ended up successfully installing Magic Keys. I just need to learn how to use it and change the inputs and settings. Was definitely a pain in the ass. So don't change any settings. Anybody who buys Magic Keys, buy the on-screen version, $30. Don't buy the $160 one. It's not worth it, in my opinion. The best way to do it, set everything on the screen. You have to click and drag all your parameters anyways. There's no sense in having more hardware cluttering up your desk. I have all the files already made for all the masterclass students. You don't have to do any of that legwork. Is the 15-second on the Pro Trend or premium account? It's on the highest tier account. I don't know if they have it on the middle one. I have the highest one. If you've had TradingView for longer than 6 months, as the whatever the first tier of paid is, if you go to pay for it, they offer you, I believe it's 50% off for the entire year. So I just purchase it once per year. I think it's about $400. But again, can't build a hammer without a house. It's just one of these things. It's so nice to have the bar replay, the extra bar replay tools and stuff like that too. So definitely advise doing it, especially if you're taking this serious enough to become a trader. Thank you, bro. Bought that a while ago, had it sitting in the drawer. Cool. Magic Keys Calc. Cool, thanks. Okay, guys. Well, listen, my account only has up to 1 minute. Is that okay? It's more than enough. If and especially, you know what, man, it's pretty expensive to run the premium account month to month. It's like $70 or something like that. So it's, if it doesn't fit your budget, like, man, no hard feelings. Once you pass FTMO and shit like that, then I would say obviously bump it up. There's a lot of hidden supply and demand breaks that you can see on the 15, even the 5 second. I really, really like. So today's trade idea was based off the 5 second chart. I can show you that, guys, that really quick. Let me just get rid of my bar replay tool, and let's go over to the 1 hour. Holy fuck, look at this, just flying. I caught this literally almost to the pip, not even half a pip down here. And I will show, I'll show everybody how I ended up doing that. Thanks, Tyson. Awesome. You answered most questions as we went. Looking forward for everything. Awesome, man. So yeah, so down in here, so this is a prime example of how to use the seconds flip. Let me just go down to the 15 minutes. So once we see this liquidity kind of get taken right here, okay, all this liquidity, jump down to the 1 minute. Let's go over to here. So the initial one that I looked at was in and around this region. But the one that I ended up taking was once we broke this liquidity point. You gotta remember, we just took out all these equal lows on the 4 hour and the daily, and then broke up but failed to break structure. So what that means is more than likely we're gonna have a weak low. There wasn't enough liquidity generated. So what that means is now when we come back up to make equal highs, then we're gonna have enough to kind of do it. So what I ended up taking was right in here. Let's go down to the 15 second. I might actually show it there. Or was it a 5 second flip? And I usually only use the 5 second when it's news. And the reason why is because it's a little bit more clear. Whereas if it's not on high volume, you'll notice that it tends to get a little bit choppy. Like this, 5 second. So look at, this is the flip that I took. Again, it happened right after. So we broke structure right here, right? Go like this. Equal lows, right? So as soon as we did this, as soon as we essentially came up like this, so this is the lowest point right here. This lowest point was from this highest point. When I saw this impulse, I took it right here, stop loss under here, and the rest is history. Yeah, man, it's pretty choppy when you look at it like this, but it's just a matter of just seeing these little details where essentially we broke. Again, we didn't break anything here, so you couldn't really take anything like this. But we would have to break this kind of inside bar to be able to do it. But once you started to see this little consolidation, and again, I only use 5 second on the high impact news days. So you can see low created this, boom, change character, and then away we went. And now it's running. Let me just check. I'll send a screenshot in the chat after. I don't want to be opening up my my terminal with Windows while running Zoom and all that stuff. Okay, show that buy entry. Go. I'll post a picture of it in the group chat shortly. I'm still running full volume too. It's probably, yeah. Anyways, it's, yeah, pretty crazy. Low, it was only like a 1/4% risk though. Anytime there's news, it's 1/4% risk only. So that's it. Hope you guys enjoyed the first class. Lots to come, lots of cool stuff. You know, the secret sauce is definitely what most people won't do is jumping on a live trading session with you guys for 2 hours, 3 hours every single day for an entire week. I don't know anybody else that's really doing that. And it's important to do it. It's important to show the transparency, taking losses, taking wins, taking break evens, all that shit. But yeah, man, we'll catch up with you guys a little bit later on this week. One thing I do want to mention before everybody dips out, allocate 1 day per week. Whether it be tomorrow or Sunday is usually the best days. I know you guys want to back test. You guys want to get this strategy hammered down. Take 1 day every single week. It's mandatory. I'm making it a mandatory requirement. You're going to have this deal with yourself. Take a day off the charts completely. Okay. You need to do it. You have to do it. You need to take some time off. And if you don't know what I'm talking about, jump over, go look at the first post on my Instagram page. It's called Downtime. And let that sit with you a little bit, because it is so crucial to have time for yourself away from the charts. Otherwise, man, there's absolutely no point in leaving a 9 to 5 job to come do this, because you're going to be working way more hours doing something that you did love and turned it into something that you started to resent. So that's it for today. I'll get these videos uploaded towards the end of the weekend, and have a good rest of your weekend, guys.